With Bitcoin up 4 straight months since the September bottom and 14 months in this cycle from the bear market low in November of 2022, there is a feeling in the market that Bitcoin could go on to make massive gains. In particular, breaking previous records because this time is different. Into this video, I want to uncover what these times are different look like, what those times are, where could Bitcoin go from here, the price predictions and how accurate or realistic might they be. Hit the like and subscribe button. We've got a lot to unpack and get through in today's video. You guys know the deal, where you're at your home of macro cycle analysis. We've got plenty of that coming up as well. Links to the top of the video description for our free TIA crypto and economic report. We do more than just look at altcoins and get degenerate about things. Okay, let's start off with the macro cycle before we get into the price predictions of Bitcoin and how realistic they might be. Now, it's important to get through this because we're here as holistic traders and investors to understand the market at large and not get too caught up in the day-to-day ups and downs of Bitcoin. You may have seen this before, our 18.6-year cycle. We're roughly around here, and we're looking forward to heading up into this winner's curse phase of the market. Essentially, it's where everyone is making money in Bitcoin, cryptos, in the stock market, in real estate, most importantly. Because along the journey here from the low of this cycle back just after the GFC, we haven't seen anything as crazy as what I'm expecting to come up. We have seen plenty of gains in real estate from those bottoms, but this is where things get really, really crazy. What I think will happen is people will be taking profits from their Bitcoin and their cryptos, potentially their stock portfolios, and ramming it into the real estate market because they're seeing everyone make a lot of money from real estate. We have a lot of time to cover that, and I just wanted to bring that up at the beginning because we're looking at the macro cycle here and what is possible for Bitcoin, I think, over the next couple of years. Now, how on earth can this be happening when we have several data points continuing to be thrown at us day to day that should suggest the markets should collapse relatively soon? We heard about it in 2022. We heard about it in 2023. Those were the best times to be getting into the market, considering where we are for the S&P 500, the NASDAQ, the Dow Jones. They're all at new all-time highs. The global markets, the Australian market hit a new all-time high. We are in all-time high territory for Germany, France. I bring these up because essentially the majority of the world is hitting new all-time highs on their stock markets. The stock market is different from the economy. If you're trying to make money, you trade the markets, you don't trade the economy. Now, we have a few data points here. It was only yesterday that I talked about credit card rates here. You can see credit card debt as well, and this one looks at credit card delinquency rates. Essentially, you have credit card debt rising, so more people are buying stuff, and we've seen that the spending has also increased, and you're seeing delinquency rates increase. So when they try to put a few of these points together, they're trying to say that, well, the market should come down. And yes, we do believe the market will come down. But remember, the timing, this is your key. You watching this video here, after you hit that like button, this is your key to what happens next in the macro picture. We see the markets heading up for the next couple of years because this has happened for over 200 years. There's your reminder there. Over 200 years. If you want to learn more about that, get the book, The Secret Life of Real Estate and Banking. Okay, so that's where we are. This was just a quick look at some more data points. There's plenty of things here to look at, looking at unemployment and all sorts. We've gone through this data many, many times. I want to get on some other data today. Macro cycle at large, we can see prices continuing to head up. Now, a big question. Listen up here. A big question that people have is, where do you put your money when the market collapses? Now, I've gone through this a few times in previous videos, so to not make things too long, when the markets do collapse, we see a shift from one asset to the next. Now, it's going to be up to you to go back and have a look at where these assets peak and where they trough. But as a quick one, real estate peaked roughly 2006. The stock market peaked in 2007. Gold peaked in 2008. Wait a second. The US dollar also saw a run up here. So you want to basically see US dollars going up when things are crashing because people fly to the US dollar to hold money in cash. And no, the US dollar typically doesn't collapse in these times when the majority think it will happen, and they think it will happen this time because this time's different. Forget that aside. So you could see the safety in the US dollar, and then gold also peaked in 2011. So gold had a peak roughly 2008 and fell from that point. And as gold was falling, the stock market was bottoming. So if you can rotate and get this entirely accurate, you could go from real estate into the stock market, which is going to be very difficult. I'm not saying to do any of this, but if you wanted to get those exact peaks, well, your real estate was 2006, your stock market was 2007, gold was 2008, then you could possibly hold some dollars for a period of time until the stock market bottomed. Then you could throw it all back into the stock market and ride that market up because the stock market had better gains than gold at that period going into 2011. And then you could look like an absolute genius, sell your gold into the stock market again if you happen to hold the gold instead of the stock market, or you could sell it into real estate because, well, real estate bottomed in roughly 2011, 2012. So if you think you can cover all of those pieces of the puzzle across a period of time where things are going to look like the world is collapsing and never coming back, and that roughly took about 6 years, 2006 into 2012, then you're going to do better than 99.9999% of people. I don't think I'm that good, but when we look back in history, and obviously hindsight's way easier, that's essentially what happened. You can see certain markets peak and then start to roll over. As I said in the intro, it's important to have a look at the whole market as holistic investors because it's made up of multiple sectors, commodities, the stock market, real estate, and of course this new industry, Bitcoin, cryptocurrencies, which a lot of people are looking at as being this time is different. So I want to try and squash that because it screws everyone who believes that every single cycle. I'm not talking about only in my lifetime. It's from researching it from years and years gone by, previous cycles. The 1920s, they all thought this time was different, with stocks being a new thing. Can you believe it? The public was allowed to invest into stocks early 1900s. That was a new thing for them after the First World War. Everything went up crazily, as we know from history. They believed this time was different. Everyone's going to get rich and stay rich. Obviously, after that, everyone was poor and they stayed poor for a very, very long time. So for BTC, we have a short term, we have a long term. Short term, Bitcoin is showing some strength here. Day after day, it's breaking through significant levels. It's broken through 45, it broke through 43.8, and it held above 42.2. Now I've got two particular areas above. 46.5, which is our change in character bar. And if you guys have been following since April 2021, so coming up to 3 years now, this is the same rule that we used back then on BTC to understand whether Bitcoin was going to push to new fresh highs after it just put in a new all-time high. Everyone was exuberant. They were just hoping for 80 grand, and the masses, your YouTube influencers, were telling you 80 grand. I went on Cryptos Are Us with George, and everyone was looking for 80 grand. I just said, if it doesn't break this bar here, you can see the significance, it's not going to make it to those prices. Obviously, that is not what the masses want to hear as the market comes up. So this is why I'm just watching this particular bar, high volume, after a significant top, in this case was an all-time high, market change of behavior, crashed down, and it just could not find its way back to those levels. So in this case, if the market breaks above this, that is going to signify that, well, even if we do get a pullback, it's not going to be anything too severe that would correct this into a new bear market. So yeah, keep our eye on 46,500, and then of course that top there at $49,000, which was the ETF hype news, your ETF correction. Now we're trying to work our way back to those levels. That's the short term. Michael's also put out a fantastic video in the last couple of days looking at there's an 86% chance that Bitcoin could have a pullback based on its essentially 10 years of history, almost its entire history. And what that looks like is the weekly swing bottom has broken down, and 86% of the time, after the weekly swing bottom has broken, Bitcoin goes on to make another swing. Doesn't necessarily have to take out that swing bottom, but it could put in a higher low. So 86% of the time. There are times where it doesn't happen. And like we saw in the banking crisis, that's what that low is right there. The banking crisis, Bitcoin broke that swing low and then showed extreme strength to the upside. So yes, you're going to have the newbies saying, well, that's an up, down, sideways. No, you got to look at the probabilities. The probabilities are Bitcoin could correct here based on what it's done in the past. 86% of the time, it'll come back and swing this chart down. Whether it's a higher low or a lower low is not the point, but it can swing it back down. And 14% of the time, it will just run up. And when it does, it's a very strong run to the upside. So I'll be watching for that break and to see if we get that strong run to the upside. Otherwise, we're looking at an 86% chance that Bitcoin does reverse in the short term. So with that in mind, short-term stuff out of the way, let's have a look at this macro time frame. Because short-term, it still hasn't broken above, which means, well, we could still go down from this point. That's a different time frame and view on the market, which in this case is neutral to bearish, but the macro, I'm still well and truly bullish because we have not broken down any key levels. Those key levels are 32, and I'd say around here at 25,000, those lows there. So it doesn't look like we're going to do that. But let's have a look at Bitcoin and the possibilities of this huge, huge gain to the upside. So here it is. We're looking at Bitcoin doing a 22x because this time is different. So this with Sir John Templeton, he is quoted with saying, this time it's different. They are the 4 most dangerous words in investing. A lot of people look at this and they say, well, maybe this time is different. And I think it's important to break the two apart. It's not that this time is different. It's typically that they rhyme, which might sound like it's different, but the cycle is a cycle and it will do its thing. Now, the main thing, or the main point that people bring up with this time it's different, if I think I've got a few here, is that the ETF is here and it doesn't look like things want to collapse and we could go on and make these 22Xs, which would take us past previous returns that Bitcoin has done. So Bitcoin did a 22x last cycle, and people are hoping that it does a 22x this cycle, or at least a 22x, which would put it to $340,000 BTC. Now I want to, I guess, be the bearer of bad news, or just try and keep things a little bit more level-headed. And I appreciate all of the comments here. I'm not trying to rip anyone apart whatsoever. Looking at this one here, very, very well put. Jason, your analysis is usually spot on, so I'm very careful not to bet against you. By all means, do your own thing, okay? I can also be wrong, and I am wrong. I really don't like to use this time as different phrase. Please don't. But doesn't it matter that ETFs are buying more than newly minted Bitcoin by miners? On the one hand, it does matter because obviously that's going to be price appreciation. On the other hand, Bitcoin's total market cap is far greater than previous cycles. So previous cycles, the market cap was lower, which makes it easier to pump the price. And I'm not saying this time you can't pump the price because obviously there's more money coming in, but you need that more money to pump a bigger market cap itself. So this time is different in the sense that we have a different narrative, but is it really that different when it comes to the supply and demand? We need more demand because the prices are higher and we have a bigger market cap. We have a bigger market cap to move. Bitcoin's current market cap, beautiful number there, $888 billion. Let's call it $1 trillion. Now to get it to 2, 3, 4 trillion, you need a lot more money than what you did when it was sitting at 100 billion or $10 billion. That's should be pretty simple, and I suspect the majority of you guys watching understand that. So the bigger the market cap gets, which is this, the more money that has to come in order to push that price the same percentage as what it did previously. For example, $100 billion market cap to $200 billion market cap, you need $100 billion. Of course, we're just going to put those things aside where 10 billion actually moves 100 billion because of how crypto is illiquid. That aside, 100 billion to double. When Bitcoin's at $1 trillion, it's going to need another $1 trillion to double. See how as we grow, the possibility of this time is different is unlikely because the narrative is different. So what does that look like on the chart and what price does that equal up to? Well, from the post here, from the cycle low, 15,500, a 2100% return would be roughly around $340,000. Now I've got those numbers from the previous cycle here. There's your cycle low, roughly $3,000, 3,100 to the peak at $69,000. So 2100%, which is a 22x. From the cycle low, there's your 2100%, roughly around $340,000. And as for the bull market that Bitcoin is in previous cycles, it's never done the same percentage or more of gains that it did in the previous cycle. And so when you look at 3 data points here, well, the outcome is 0%. Now we only have 3 data points. Maybe this time is different. We don't want to say that this time is different. Maybe it's the same. How's that? How about we say this time is the same and we can get to $340,000. But for Bitcoin to get to $340,000 from the current prices at 45 grand to this level is about 630 or 640%, which is about, call it around a 7x. And so if we're doing a 7 times $45,000, well, 7 times 45,315. So let's do 7.5x, basically right to that target there of $340,000. So from the current price, Bitcoin would have to do a 7.5x. Probably unlikely. So if you're only getting into Bitcoin now, that's why the majority say, forget Bitcoin, go and gamble on altcoins. And that's all going to come down to how much money you have, how much your risk tolerance is, how much time you have to research as well. If you want something simple, maybe Bitcoin doubles from this point. Maybe it does 3 times. Maybe Ethereum does 3, 4, 5 times from its current price. And so if you want to get greedier or if you want higher returns, more than a 10x, it's unlikely that Bitcoin is going to get that for you. I think most understand that now. And so you're going to have to look elsewhere. And that's how the game of money rotates into stuff that's going to give you bigger and bigger returns, because most continue to miss out on that next greatest thing. And that's how the risk level increases on the next move and increases again on the next rotation down to smaller market caps, and then the risk level increases yet again. And so this is the very dangerous game that is now being played over the next couple of years, which is also being played in the stock market, and more importantly, it's also being played in real estate. And unfortunately, the majority are playing this game in real estate at the peak of the market. They're playing this game by trying to find property that was in their capital cities, which now is too expensive. Then they look for properties that are maybe units or apartments, condos, something that is on the same piece of land, but there's less of them, or sorry, more units with less land. And then you start to look further out to different cities, higher risk stuff. And then you sort of look to the less desirable areas, which were obviously once less desirable, like main roads, building next to or on or very, very close to train lines, or just areas that weren't as desirable in your particular location. And they're doing that with leverage from the banks, more money created from the government that allows or gives you an incentive to be buying in particular areas and all these sorts of things. That is how this stage of the cycle occurs. And unfortunately, the masses won't see it. And we end up into this stage where the market cycle peaks and crashes, and we have to go through a pretty significant recovery that takes several years. Because what happens at the peak is they're all playing that degenerate altcoin game, but with a lot more money in the real estate market with leverage from banks. That's what's happened every single cycle, basically for the last 200 odd years. The cycle continues to blow up at that point, higher and higher, before we get the rollover effect. Now that we've covered Bitcoin, hopefully we can see that this is unlikely, very, very unlikely, almost impossible for 340,000. If I'm wrong, come back, screenshot this, let me know. It would be fantastic because we're all going to be extremely rich, because if that happened, then, well, altcoins are probably going to do even bigger gains here. In terms of it's different this time. This time it's different because ETFs, and I saw a couple here, there people were feeling different things about the markets. Just remember, follow the charts. It feels now Bitcoin is at a price action dominated by ETFs rather than underlying spot Bitcoin. Yeah, potentially, but you need more money to get these things up. Come back to the charts, follow what's going on in the chart themselves, and keep the emotions aside. Keep the emotions for when you've taken the profits so that you can go and spend those beautiful profits on something that is fun, that you can use physically, as opposed to getting great feelings in your jellies throughout the Bitcoin cryptocurrency cycle. Like and subscribe. We got plenty more coming your way throughout the crypto and Bitcoin bull market, and of course leading into this peak of the 18.6 year cycle. Thanks again. Quick shout out to the guys that said hello today. Steve at the gym this morning, been watching for over a year now, and Michael that was eating a tuna sandwich down at the bakery yesterday. See you at the next video. Peace out, guys.